Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager for GDM. Today's outlook, we start with the morning session in Asia, and stocks mostly advanced this morning, with Tokyo, Shanghai and Sydney markets finishing the week at new highs. Global markets had cheered the Federal Reserve's statement in the previous session, which hinted that the central bank might not pull the trigger on interest rates until later this year, as has been expected by investors and banks. Japan's Nikkei 225 index ended the week at a fresh 15-year high of 19,560 after waving between gains and losses on rising yen against the US dollar. Australia's S&P 200 index widened advances in this afternoon session to finish at a new and a half-week high of 5.975. Overnight US stocks closed mixed as the Fed-inspired rally lost steam amid a strong dollar. Now the Dow Jones Industrial Average and the S&P 500 closed down 0.7% and 0.5% respectively, of course, while the Nasdaq settled up 0.2%. European equities opened higher on Friday this morning after markets paused for thought after the US Federal Reserve's later statement. In other news, markets will watch the second day of European Union summit in Brussels, which is today, at which Greek debt crisis, trend and conflict in Ukraine have been on the agenda, among other issues. The euro steadied around 1.07 versus the USD. In the commodity sector, we're looking at gold. It retained recent gains to trade near a 2-week high today and was steady for its biggest weekly jump since January after the Federal Reserve's cautioned over its rate hike path and, of course, the US economic growth. The metal is steady right now at 1170.80 an ounce, up about 1% for the week, and its biggest weekly gain since late January. US crude, or WTI, for April delivery fell 18 cents to 14.33 a barrel, headed for its fifth weekly loss. A weaker dollar typically supports prices of commodities. However, it dominated in the greenback again, making them cheaper for holders of other currencies. There appears to be a little bit of let-up in the US dollar in the Asian trading period, so crude prices might be coming off those lows. However, the US crude inventory numbers have been climbing for the last 10 straight weeks, sitting at their highest level in 80 years. So that's a further supply-side concern on top of news coming out from Kuwait. There doesn't seem to be any sign of OPEC doing anything to turn the taps off, so it makes it hard to predict a floor for oil prices. And for today's calendar, in focus is Bank of Canada and the Consumer Price Index with retail sales coming up at 12:30. That's all from me for today. Thank you very much for being here. Stay tuned. See you next time. Bye-bye.